Good afternoon, traders. This is Christian from Tribeca Trade Group, and it is Thursday, June 18th, just about 15 minutes before 5 p.m. here Eastern. So, averages today, pretty much indicating, that's why I've got here a little bit of chop as the theme of the day. You got SPY basically, flat for the day. Qs outperformed again, just a touch up 30 basis points, and small caps were flat on the day. They actually had the biggest outperformance. Kind of gave you a little bit of a sense today that it wasn't one of those days where there was huge volatility or I should say huge volatility for the day. Even though like the overnight session was a little bit weak, the pre-market session was a little bit weak. Just seemed like a lot of chop. And if we kind of go over the S&P chart for the day, you kind of have two inside days, which is not a bad thing in my opinion. And you could see there's just a lot of chop in the overall S&P. Whenever you have these long wicks on these 5-minute candles, when you're trying to like make a move, in either direction, it just means that overall there's just not a lot of kind of conviction or momentum for the day in the overall index. Again, it's important. I think it's always important to kind of look at where things are going in terms of the overall even though like I'm not trading the S&P 500. I don't usually trade the Qs or IWM unless volatility is really high. I do switch to trading a little bit more index when you get when the VIX starts to go north of like 40 per se. But really they just kind of give you a nice model for like what to do for the day. We talked about that a little bit yesterday in yesterday's video, where we talked about where things kind of stalled yesterday. And if you're using the value areas, it gives you a sense of a risk to reward ratio, right? Where you're running into resistance. Could we break through the resistance? Yes, we could, but we needed some pretty powerful momentum to do it. And usually when you run into a little bit of resistance, it's a good place if you're up for the day to take a little bit of profits. So kind of the same thing today. It just looked like a little bit of mush today. And I don't think much different for the Qs. But not much. You could see the range was really tight. So who knows? Maybe with this range that we had today, maybe we are setting up for a decent move tomorrow. Who knows? I know a lot of people toss around the term quadruple witching, but they don't really know what it means, or they say something, try to say something unclever about what's going on for quadruple witching. I could tell you, this used to be like what I used to do for a living. I used to work on a Delta One trading desk at Merrill Lynch for a long time. And I could tell you, knowing what I used to do and knowing what I'm doing now as a retail trader, there's not really much for you to kind of do. And there's no like major trade for you to do. The guys who are positioning for quadruple witching, they've got like, they could be swinging around like $1 billion, and they could be making a spread on $1 billion. So what does that mean? Well, I think I described quadruple witching in yesterday's video, but I'll just go through it really quickly because I know it's an event that you should be aware of tomorrow, just so that you don't really get misled by anything, and you kind of watch out. Retail traders, there's just not much edge to doing a ton of things around the open tomorrow. So what happens on tomorrow's open? Well, futures expire. So officially, most people have rolled their futures exposure. They do that, on Friday of last week or the beginning of this week. But futures, which there's the June contract, that officially goes away tomorrow. How does that get expired? It expires on the open. It's called special quotation pricing. That means the actual, like when you see this, it'll be put out later, where the official close of the June contract is. How they get that number, it's what's known as all the market on open orders of the index. So for example, the S&P 500 or the Qs, the 100 for the NASDAQ, so let's stick with the S&P. Those 500 names that they'll take the mark of those 500 names, the opening price of all the 500 names in the S&P 500, and they'll use that to figure out where to expire the price of the expiration of the June S&P futures contract, right? So that's how it's done. Now, why will there be a lot of volume on the open? Because what happens is mostly the only ones who are left with June positions are the dealers, right? They are arbing a spread between a funding. I know this is a little bit in the weeds. This is a little bit complicated, but this is why you have to have like $1 billion to make. I don't want to say $1 billion, but it helps to have that much money to earn a spread. They're arbing the funding rate going all the way, and the interest rate, and the div rate all the way till tomorrow, and then they'll realize that. And what they'll do is, if they're sitting with a position that's still on their books in June, they will be letting that June position expire, and they will be offsetting that with with either buying or selling a basket of S&P stocks to offset that exposure that essentially goes away on the open, right? So the futures contracts will automatically expire, and they'll be given the price of that settlement in order so there's no slippage between that calculation, that market on open. Those dealers, big broker dealers, will be offsetting their orders so that there's no slippage by putting on what's known as a market on order open, guaranteeing them the opening print. So, what does that mean for you? The most likely, if you're listening to this, you're a retail trader. That means that there will be a ton of volume on the open. Now, they'll look to arb that. What people will do is, just like with the MOC imbalance, oh geez, it's $1 billion or $2 billion to buy on the open. And then what they'll do is they'll try to trade in. So for the first 5 minutes of the day, maybe so between 9:25 and 9:35, just stay away from basically if and again, I'm not telling you what to do. I'm not giving any advice or recommendations. But for me, I would not trade pre-market for the 5 minutes leading up to the open or the 5 minutes after. That's basically all you have to worry about. There'll be a ton of volume. You'll see people on Twitter, oh my God, why is there all this volume in Apple on the open? What happened to Apple stock? It's just people expiring, basically putting down big orders on the open. Most of them offset, but there may be a little bit of pressure on the open, so watch out for that. On the close, a little bit different of a mechanism. That is, there'll be a lot of volume on the close because of index rebalancing, right? S&P and NASDAQ rebalance all their indices, and that goes down they get the closing print to make sure that all that stuff goes in there. So anybody who's modeling like a portfolio of S&P, and they're trying to basically they're benchmark to the S&P 500, and they're replicating it with a basket of stocks, they have to adjust to what the new components are. And there's really not a big change in the components, the actual components. It's just a shifting of the weights. That's the major thing that's going on, right? So when you look at the S&P 500, or the example that I always like to give is because all the sector ETFs also rebalance. So for example, XRT is the retail ETF, and it's equally weighted. So if you look at the description of this, it's an equally weighted index. So if you bring up the components, so what does that mean? Every name should have the exact same weight. Why don't they have the same weights right now? See, Wayfair is the biggest weight. Etsy's the biggest weight. Chewy. Why do you think that is? I'm asking questions I know you guys can't answer back at me. But why do you think out of an equally weighted basket, when everything's supposed to be the same, why does Wayfair, Etsy, Chewy, and Amazon have the biggest weights? And if you go to the bottom ones, CHS, Weiss Markets, Dillard's, Macy's has the smallest weights, right? Well, the reason is performance. because this hasn't been rebalanced actually for 6 months. The reason why it's a quarterly index rebalance, but they postponed the March one. So if you look, take a look at the difference between the performance between Macy's, for example. So I'm giving you the answer in a kind of an example. Look at what Macy's has done in the last 6 months. Woo! Look at what Wayfair has done in the last 6 months. So what does that mean? The variable from what happens between now and the next index rebalance, or now and the last rebalance 6 months ago, is price is the variable. So these names become a higher weight in the ETF, because the shares don't change, the position doesn't change. What does change is the price. So as some names outperform others, they become a bigger weight. They become a bigger portion of the index because they're not changing the weights every day. They only change the weights once a quarter. So names like Wayfair, Stamps.com, Etsy, Chewy, if there's long assets tracking this ETF, what has to happen is these names have to be sold a little bit. And if they're going to keep in Macy's and some of these names that are the low performers, they actually have to true this up, and they actually have to buy some of these names, Nordstrom as well, to bring the weight up so that it gets back to equally weighted. So when you look at this on Monday, everything should be about the same. This column over here that I'm highlighting should be about the same. All right, so that's index rebalancing for you in a nutshell. That's why you'll see heavy volume in everything, not because they're taking out a whole bunch of names and adding a whole bunch of names. They just all have to be reweighted. Now, that's just one index. Now, if Wayfair is in something else and Etsy, they may actually have to be bought in other indices. So you have to lump all the indices, right? We're talking about every ETF and index out there. So there's a ton of them. So all of these things have to be done. Every single S&P and NASDAQ indice has to be done tomorrow. So keep in mind, somebody asked me about, I think Zoom is being added to the NASDAQ. And they said, hey, does that mean that Zoom is going to go up tomorrow? Probably not. What happens is all of these announcements were made last Friday. So as I mentioned, all these big institutions, they're trading that what has to happen on Friday for Friday's close. They trade that like a week ahead of time. They're already anticipating. Remember how the market always works. It's always people who are in the know. They look to put those changes on. So originally, like Wayfair, people were selling Wayfair maybe a few days ago, and now they have to basically unwind that. So there's a lot of mechanics that go on. But the major thing is, and I'll leave it after explaining this for about 10 minutes, is just don't be smart. Don't trade a lot. Don't oversize your trades around the close. This is just not a thing for you to really to try to think that you can game or make money. Now, on the flip side, if you want to take a couple speculative things, you can, because some things will move. And I know people like to take lottos and options on Friday. Those may work because, some names are going to move a little bit. So that's my, again, I'd like to give you guys this explanation because this is what I used to do for a number of years, right? So I know this stuff really well regarding that. All right. What else happens? All the spider ETFs go ex-div. So what does this mean for you? Well, when you get up in the morning and you're looking at the price of SPY go by the CNBC scrolling ticker, it's going to say down in the morning because they haven't adjusted it for the dividend. But again, it really doesn't. By the open, everything straightens itself out. All right, so that's that. Let's talk about sorry, that was a good 10 minutes on that, but I try to help. Let's talk about just overall market. I said today's chop. Again, there seems to be a little bit of whenever the market kind of opens a little bit lower, there seems to be a lot of buying in the growth names. So it does show that there's been a couple of tweets that I've been seeing about money market funds and how there's a lot of money on the sidelines. That doesn't mean, by the way, that there's going to be like all of a sudden that means that everybody's going to be buying. Who knows what those people do? They may be risk averse and they may leave money on the sidelines. You don't know what they're going to do. So I just find that kind of stuff funny. People like, oh, look at all this money on the sidelines. It's going to go back into the market. When is it going to go back into the market? When is somebody going to be, um, you know, not worried about what the market is going to do and put all that money back to work? Maybe on a dip. So it kind of leads me to the next point. I think that I have to go on like another quick minute rant. I put out numbers every day as I get them from Bloomberg about like what's going on with COVID cases. Listen, I hope more than anything else that these numbers stay down and people stay healthy and it doesn't affect people. But I would have to say that this is one of the biggest worries out there is that, and by the way, nobody knows. Everybody seems to be an expert and tells me like what's going to happen with the, oh, they're not adding the numbers up correctly. They're going up because of the testing. What about the hospitalization rate? Da 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 da. Listen, we're all looking at this, but nobody knows what's going to happen. You don't know what's going to happen when all these cities reopen. New York City is scheduled to reopen on Monday. You just don't know what's going to happen. It's this is something that none of us have really experienced before. So, think about what as we get new information about this. Somehow it seems to go into like a political fight, which is completely like I don't understand why people get into that, but this is something that nobody's been through before. So how do you think you know the answer to everything? I think if take the data as objectively as possible. Listen, back here in February, did I think that we were going to have to shut down the country? No. So I'm trying to analyze the numbers as I think everybody should be, with you know, and being objective as possible. Nobody wants to get caught if these numbers go up. What do you think is going to happen? The market's going to sell off. If hospitalization and deaths and so forth, and if they have to scale back the reopening, listen, this is not like rocket science, and nobody knows how this is going to happen. So, if you're one of these perma thinkers that you think you know because you're an expert on this and you're not in, I mean, it's the same thing with being a perma bull and perma bear. When people are fighting on Twitter always about that. That's not me. That's not how we analyze this market. So if that upsets you, you don't have to watch these videos or follow me on Twitter. But hey, I'm in this to try. First of all, I don't want anybody to get sick. And number two, but as a trader, I'm here to make money. I don't care about what your view is on that kind of stuff. We're taking information as we get it, and we're making decisions based on it. That's all that we can do, in terms of that, and basically control your risk. So we'll see how this develops, but it does look like there's an appetite for, there's a lot of stocks that look like, that have either broken out or look like they're going to. Some of them are stay-at-home stocks. Peloton is one of those names that we looked at. Just to kind of go back to we go back to some names that have been seeing option activity. I don't know what's up with this service now, but they keep coming in with calls. July 2nd calls right around the close. Roku was another stellar play. We talked about where we thought Roku could get to. Look at where Roku got to. If you watched my video earlier in the week, I said top of value could be something where this drifts up to 127. So that's pretty nice. I think we talked about Zscaler earlier in the week. A nice pop on that one. By the way, I didn't trade Zscaler or Roku, full disclosure. I'm not one of these guys that say, "Oh, I called it for you." I didn't have anything. I tried trading CrowdStrike today, made a little bit of money in it. The way I'm trading, just to kind of give you instead of my rants, I will give you a little bit of how I'm trading this market right now. I'm pretty happy with how I've performed for June. We talked a little bit about the hiccup last week in an earlier video, But at this point, I'm sitting on some nice gains for the month of June, and I don't really feel compelled to kind of push, adding a ton of risk here. What I'm basically doing is I've got some stock positions, and basically I'm holding like one option position, uh, you know, and 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 that's how I'm kind of shuffling things. I really don't want short-term option exposure. Most of the time, I never want that. A lot of short-term option exposure. But the VIX is still around 33, and I think right now, you're asking for yourself to get caught one way or another if you've got a lot of short-term option exposure. So I continue to maybe have one or two option positions on given the day. And then, I keep saying in a perfect world, what happens is I get into a position that day, I take a couple targets, and I leave the residual position on. And that's basically what I'm doing right now. And I'm actually like being patient. And I don't know if we're gonna get any type of market dip, because I think right now the indices look fine. There's no sell signal or anything like that. But I just think that if we do get a dip, buyers are going to come back in and do what they did after basically what we saw on Monday. So that's kind of what I'm looking for. I'm welcoming at this point any little volatility. I've got some positions on. I'm participating. Again, if you go through, you know, Ring is another one we're watching. I think a call spread makes sense for something like this. This was brought to me by my attention by a member. Could be ready to take that next leg higher. We'll see. Shopify, and also like the other thing that I'm doing is I'm sticking in some positions in my tactical portfolio. Right, that is a portfolio of 30 names that I've got names like Shopify on. Right, here's what it looks like. Right, I've got a portfolio of 30 names on. I'm still waiting for the performance to come over. This was being held at Motif Investing, which was really nice because I could show the performance. I could show you what the portfolio looked like. I was tweeting that out regularly, but they're gone now. And now that has moved over to Folio, and Folio still doesn't have the performance, so which is really aggravating. They said that they are going to bring it over, but it's not there yet. So if I have a link, I will send it out. But that's kind of my thought process. We'll see tomorrow if we can basically find something interesting and find a nice signal for tomorrow. But I'm okay being patient right now and just like a game of poker, playing the best hands. So, continue to stay in some names like Shopify as they break out. But in terms of my trading account, being a little bit more nimble right now and waiting for and welcoming some volatility because I think that'll bring out the buyers. Also, most of those growth names have just been on absolute fire. I mean, this Fastly is another one that has broken out like crazy. So again, I'm welcoming even like a little bit of sell off in growth names because I think that just like last Thursday ended up being a good buying opportunity. I think the same thing. So that's it for me for today. Thanks for watching, everybody. I appreciate you listening through all my ranting and raving. Have a great night, everybody. I'll see you guys bright and early tomorrow.